Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. By the start of 2024, we would expect that Tesla have ramped up the new factories. We would also expect Fremont to be at perhaps 50% more capacity, and Shanghai, well, at this rate, potentially Shanghai at a run rate of 2 million a year. If Texas could reach 2 million a year and Berlin 1 million a year in 2024, then that is a total of 6 million units. If we round that capacity down to just 5 million, then it's not too far-fetched. It's very easy to see how I have arrived at all these numbers. I would say at least half of the sales would be for the Model Y, and none of them would be for the Compact, as I doubt that will be in volume production that early. But it could be, and if it is, then the quantity would likely be higher. The Compact will be the fastest ever production line for an EV. The Cybertruck would also make up a large portion of these vehicle sales too. I was wondering if it might indeed be possible to hit 10 times earnings by 2024 from today. Well, likely a 10x earning from 2023 Q4's EPS. The 2021 Q4 EPS is going to be around $2.50. This happens to be over 10x from the same EPS in Q4 2020 at just 24 cents. So can Tesla 10x again and reach a whopping $25 EPS? Let's keep the numbers quite simple and see if we can work out whether a $25 billion net profit is possible for Q4 2023. To be clear, this is not some econometrics pricing prediction for 2024. I'm merely seeing what might be possible. If we have a 5 million vehicle a year run rate, then in Q4 2023, that's 1.25 million vehicles delivered for the quarter, around 4 times as many as we had last Q4. Is that going to be enough to give us 10 times as much profit as Q4 2021? Well, let's find out. I'm working on the assumption here that the higher the volume of production increasing, the higher the operating margins, and thus net profit margins will increase due to economies of scale. In addition to that, the extra vehicles that will be responsible for about half of the vehicles will be the new factories, which will be making Teslas at a lower cost and selling them for a higher price. The margins are going to be amazing. Then most of the remaining Teslas sold after that will be coming from China, which despite being lower priced, will still have great margins. And then Fremont might make up for itself too, if it has ramped up more Model S and X lines. In other words, all in all, we should see improved margins and reduced OPEX per vehicle, all pointing in the direction of bigger profits. It's kind of hard to argue of anything less than a run rate of 4 million. I mean, clearly, Tesla are going to be close to 2 million deliveries for 2022. If next year is only a 50% growth, then that is still a total of 3 million units a year. And by the start of 2024, you would have expected Tesla to have ramped up a lot more in a year. But alright, even if it's not quite that high by then it won't likely take an extra 6 months to achieve it. In other words, if this is a good rate within a couple of years, even if it takes 2.5 or 3 years, it's still likely to be a great return within that period. I guess another way this report could be viewed might be how much profit can Tesla make when they hit 5 million deliveries. I just happen to think that this could occur in 2024. Alright, either way, we've shown it could very well be possible to reach a run rate of 5 million vehicles by 2024. Therefore, we just need to gather a rough idea of how much profit Tesla could potentially make from selling that many vehicles. Now we're talking the start of 2024, but the latest earnings numbers will be for the Q4 2023 at this stage. So perhaps we could just work through some rough numbers with those. This would just be for indicative purposes, but it could be useful to get a feel of what is still possible in just a couple of years. This might be particularly useful to anyone holding Leaps that expire perhaps around this period too. I've assigned the vehicles I believe to be a close breakup of what is sold. One thing I think is that the Model 3 is being underlooked. How often are we hearing it is the best-selling car in certain market? Like the UK recently, 8% market share. The Model 3 is expensive in the UK, as are gas prices. Yet Tesla still can't make enough for the UK market. Elon tells us that the Model Y will be the best-selling model in the world, implying in excess of potentially 2 million units sold a year. Given the margins Tesla have to work with, it could be over 3 million units for all we know. It is Tesla's most profitable and popular model, especially when all the new manufacturing upgrades are complete. But this somewhat distracts from the fact that the Model 3 may also sell perhaps 1 or 2 million units a year. Imagine a new version of the Model 3 with structural battery packs, etc. The cost of the 3 has a lot more room to move, so don't underestimate the potential from that vehicle too. As an owner of two, I can validate it is an exceptional vehicle and product in any capacity. I think the Cybertruck has a good chance of beating the F-150 as the best-selling truck in the US. I mean, we're seeing Tesla's other cars dominate every single category they're in, despite still being restricted by batteries. Why should it not occur in the pickup market too? This is the most pre-ordered vehicle in history. It has so much use and purpose, and the specifications are astounding. 2 million Cybertruck units a year may not be too unbelievable within time, but we'll just lock in 120,000 for the quarter. Now, in order to sell this many vehicles, I would say it likely that Tesla are offering the standard range version of the Model Y in all markets. In other words, there will be a lower cost Model Y available in order to help support the demand. But outside of Asia, I believe Tesla will likely only be making these with their own in-house LFP batteries, which I will assume will be more energy dense, lower cost and faster to produce than CATL's LFP batteries. By this stage, hopefully Tesla have enough LFP batteries to support this level of production. This means that the average selling price for the Model Y could be less. However, the gross margin will be higher. I've broken up all the vehicles which I think could be sold from each factory. Fremont is meant to increase capacity 50% just this year, and if we're talking until 2024, then perhaps we could expect a further 20% increase again by that stage. Elon did even say that Fremont was capable of 1 million vehicles a year at one stage. As for Shanghai, we've been seeing a Model Y come out the factory as often as every 33 seconds, which is approaching 1 million a year. Added to that, the new CATL factory, I think China at 1.36 million a year run rate is possible. Texas is huge, and with 2 years of ramping up, extensions, new facilities, I think it could be at 2 million units a year. Same for Berlin at an annual run rate of 800,000. This gives us a total of 5 million vehicles a year. I think that is all a possibility. I think Tesla are going to be continually expanding the existing factories. What was the first thing Tesla did after they built Giga Shanghai? They built the Model Y factory in Shanghai, and they haven't stopped expansion since, relative to the amount of batteries they can supply. I have then assigned an average selling price for each vehicle from each factory and multiplied them by the number of sales per factory. Remember, this is not a full econometrics model trying to establish the most accuracy. We are more just going for some common sense to try and establish if there is a potential chance that Tesla could 10x their profit within a couple of years. In addition to that, Tesla could be receiving all the FSD revenue by this stage. I'm going to assume by this stage Tesla has reached a level 5 autonomy level with high enough features to warrant 100% of FSD revenue, and we will use a 25% adoption rate and say the price is $15,000. That brings in about $5 billion of revenue, which actually is not huge. Only about 15% of actual gross auto profit will come from FSD, even with this 25% adoption rate, which goes to show that FSD itself is not the make or break of the company. The real value for FSD is the application for the likes of robotaxis or autonomous semi-trucks. Insurance is the same. It's a very small moneymaker, but merely a service required for robotaxis. The most value in FSD is when it can replace human labour. Or FSD won't start making huge money until there are millions of subscribers. Anyway, all of this takes us to about $77 billion in auto revenue. I've increased the gross margins up to 38% for vehicles in 2024. For those of you who think margins will have come down by then, for Tesla to become more competitive, this will not likely happen anytime soon. Tesla can most likely increase their margins even further. Now, bear in mind the margins are significantly higher than today as costs have come down, namely with the 4680 batteries. Not to mention the majority of these ramped up factories are from the new facilities with lower production costs. The higher FSD adoption and raised prices would also add to margins too. Revenue in energy would be up a bit higher. I'm giving it a reasonable boost, almost for the quarter what was achieved the entire last year. I think energy will be close to breaking out at this stage, but probably not too much prior, as these vehicles are still taking priority for the batteries. No one can predict energy until we get more guidance from Tesla, particularly on the in-house LFP battery production. Services would have expanded with so many more cars, but possibly still not making a profit, as there'd be too many new cars with warranties. I've increased OPEX significantly, although OPEX should reduce somewhat once the new factories are depreciated and more amortized. Anyway, this comes in at around $22 billion in earnings. This quarter, we're expecting about $2.5 billion to $3 billion in profits. Therefore, this is not far off 10 times profits in just 2 years. It does require an average of about 4 times the run rate of Q4 2021 though, but then Tesla make nearly 10 times the profits. It's not exactly 10 times the profit, but it's indicative that it is achievable, but perhaps not in Q4 2023. Maybe it would take all the way until Q2 2024. However, this is not the point I'm really trying to make. The point I'm trying to make is that this company could still 10x profits in about a couple of years. And I'm talking about 10x the latest Q4 profits, which will be record-breaking as it is. My point is, surely when a company of this magnitude already can 10x in profits in just a short period of time, then that's a big deal. Now with $22 billion, we can pretty much say that's about $100 billion earnings annually. If Tesla has a PE ratio of 50, then that's a $5 trillion valuation, or about $5,000 stock price. The question isn't if, but when can they reach this level of production? 2024 to 2025 feels about right to me. Bear this in mind too, that very little of this profit came from FSD or energy, not to mention that Tesla plan on reaching a run rate of about 4 times this size at the end of the decade. Even by 2024, there is so much more potential left for this company, for profits to possibly 10x again over the next few years. Now, these numbers are just for the current factories or just about current capacity. It is clearly obvious that Tesla will continue to improve and expand these sites. We've seen the plans in Berlin. We've even heard Elon tell us he plans to spend over $10 billion on the Texas site alone, which could make it something like 5 times the capacity it already has. Just to put things into more perspective, Tesla is going to be big. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.